This is the third video in a little series that we started on how to maximize your real estate investments by not paying so much income tax when you buy and sell them. So now we're going to talk about 1031 exchange. And 1031 exchange has been around for years. We've done several transactions this way. I've even sold property this way. And this is a great way to avoid owing the taxes. You eventually will owe the taxes, but you can avoid it forever if you do the right things, and you can defer it in the 1031 exchange. So you've had an investment property that you want to maybe exchange for another property, and it's not truly an exchange, but it is according to the IRS. So when you sell the property that you want to sell, you do that first. Normally, there also is this thing called reverse exchange. But normally people sell the property that they have first, and it might be a piece of vacant land as long as it was owned for investment purposes. It could be a warehouse. It could be another house that you use as an investment property. It could be any real estate, basically, that you're going to sell, and then you want to buy something like a vacation rental in Florida, which is part of the series that I'm doing. So how do you do that? Well, first of all, you'd have to hire a realtor who knows what they're doing to sell your property. And then just the clause that you're going to list in your property is that you're going to use this property as a 1031 exchange. When the property gets a buyer, you go and find your other property that you want to buy with it. The transaction happens through a title company and a third-party intermediary company called a 1031 exchange company, and they hold the funds. You can't touch any of the funds. Anything that's profit has to be held. Everything has to be held in the third-party intermediary company until you choose the property that you now want to buy. You've got about 45 days after the closing of the property that you're selling in order to define what you're going to buy and put a contract on it. And then again, it's going to close as the intermediary company helps the title company with the closing. And then you move on down the road and you have a whole new property, and you never touched the funds yourself. If you touch the funds yourself, it voids the process. So when you're purchasing, you also want that clause in your contract that states that you're purchasing the property in a 1031 exchange. It's not complicated. You just need to know who to hire and what to have written in your contract. Now, there's also such a thing as a reverse exchange. Oh, by the way, you have, I think, 145 days or some long period of time to close on that second property. You can do a reverse exchange where you actually buy a property in that you're intending to use in a 1031 exchange, and then go back and sell your other property. It's a bit more complicated that way, and it's also more expensive. So most of the transactions that we do see are what we call a forward or a regular 1031 exchange. But don't be afraid that, okay, I've only got 45 days to tag a property, because you're already out there looking once you put yours on the market, and especially when you start getting offers. And the 45-day clause, I believe, starts only when you close on that first property and then tag the other one. So you're in good shape. It doesn't usually run into a problem, except if you decide not to buy the property that you used in the 1031 exchange and then your time has run out. That's the only problem that I see that most people do have. But that way you have deferred the gain on the old property. You don't have to pay income tax on the gain of the old property, which is a beautiful thing. And then you're going to purchase other properties. Now, you can sell one property and buy three, or you can sell three properties and buy one, or you can do 1-to-1 or 2-to-1, or however you decide that you want to do it. A 1031 exchange is a very common process by a lot of real estate investors. So don't be afraid of the process. Don't be afraid to try it. If you've got some property that you'd like to sell and buy something that you can actually enjoy, like a short-term vacation rental in Central Florida, which I can also help you with. Those are the types of things that you can do with 1031 exchanges and defer your gain pretty much forever that way, just selling and buying properties that way. Okay, if you have any questions, give me a shout. We know some good attorneys, good title companies, good 1031 exchange companies, and we'll be happy to help.